Alibaba just recorded their fiscal year-ending results, and really it's a story about all of the impending spin-offs that are coming. And so that's what I want to cover in this video with this first look of Alibaba's year-end results. And so as you guys smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. And without any further ado, you guys already know that Alibaba has announced that they're going to spin off their cloud unit. Now, what's interesting actually with this is that Daniel Zhang is actually leaving Alibaba and he's going to Alibaba Cloud, which is pretty interesting because it just means that there's going to be new management for the cash cow of Alibaba. And I think many people looking at this at the surface level may miss that. And so I'm going to show you exactly where they say that Daniel Zhang is leaving the core business. Now let's get right into the press release. So you can see here, they started right off with saying that Alibaba is expected to be spun off. Now I made a separate video on this because I was just waiting for the press release to come out. But you know, news reports generally, or the news companies, I guess, generally pick this stuff up before I even get access to it. And so they're saying we're taking concrete steps towards unlocking value from our business and are pleased to announce that our board has approved the full spin-off of the Cloud Intelligence Group via a stock dividend distribution to shareholders with intention for it to become an independently publicly listed company. So that's very interesting. But if it's an independent publicly listed company, my question is, what happens with management? I've already answered it for you. Daniel Zhang is leaving Alibaba, and so he's going to be going to the Cloud Intelligence Group. And so we are delighted to share that our board has approved the process to start external financing for Alibaba International Digital Commerce Business Group. So that's their international segment. So they're looking for external financing. I don't understand how that's any different from just IPOing, but you know, I'm anticipating that they'll provide us with more information. And then they're going to do a couple more IPOs. So they're exploring the IPO of Cineao. I think we already knew this. And then they're going to try an IPO Fresh Hippo. Now, Fresh Hippo is the dark horse of Alibaba. It's one of the reasons why I really love the company. And it's one of those hidden gems that I don't think gets the appropriate valuation as part of the overall company. I really like, you know, the core business unit, of course, but, you know, the two emerging business sections, or actually, I guess I would say the three business sections that I really like is, of course, Lazada, which continues to outperform. You got Fresh Hippo, which sort of just gets buried into their Alibaba core operations, and you don't really know how well it's doing or what it's really worth. And then you have those new investments where Taobao Deals and Taocaicai, and they're also outperforming. And so, you know, once you start IPOing these things and spinning them off, I think you can reflect the true value of what these things are worth. However, the only thing that I would say is that, is this the right environment to be IPOing when these companies are trading near all-time low valuations? So that's the only tough part that I'm seeing. But ultimately, at the end of the day, if they don't really need the capital, whether you IPO today or tomorrow, you know, when the market does recover, they will eventually reflect their true valuation. And so there is that counter argument to my point. Okay, and they did say that they're going to break out the company into 6 business groups. Now, this might be a little bit blurry. I tried to blow it up for you guys a little bit. So you can see here, I've highlighted that Daniel Zhang, who's the current chairman and chief executive officer of Alibaba, is going to the Cloud Intelligence Group. That includes their cloud and DingTalk. And then, you know, it doesn't look like, once again, he's going to be involved with Taobao and Tmall, which also includes Taobao Deals, Taocaicai, 1688.com. But interestingly enough, of course, you know that the international part that usually falls into here, like the Alibaba.com and stuff, that's going to go into the international segment. Also, Fresh Hippo has been pulled out of here, and so you're not seeing it in here. And so let's take a look at the other 4 business groups. So here you can see the other 4 business groups. So local consumer services, or they're calling it now the local services group. That makes sense that this would get spun off. This kind of operates on its own anyways. You got Le.me, AMAP. Those are the 2 big ones. Le.me competes in, you know, it's like an Uber Eats, Uber delivery type of business. Now, Alibaba International, you know, it makes sense that they put Lazada, AliExpress, Trendyol, and Duraz. So Lazada is in Southeast Asia. You guys know Trendyol is in Turkey. Duraz is in Pakistan. Interestingly enough, Alibaba.com is in here now as well. So this is going to get spun off. Now, one of my big concerns is that, you know, the Taobao and Tmall segment is the one that makes all the money. These segments are still burning capital. So how do they address that once they start spinning it off? I guess, you know, part of it is just they're going to receive capital from IPOing these things, and so they can use that capital to continue to operate. But that was one of the benefits of Alibaba as a whole. They funded the development of the other businesses or the new businesses, but I guess the CCP just doesn't want to see that anymore. And so, okay, fine. Now, you got the Sinyao business. This is their logistics arm. And so this one is the one that they're looking to IPO. And then, of course, they have their digital media and entertainment group. This one doesn't really make much money at all. And so, I mean, it is accretive from the perspective of it. Like, I don't think any of us provide any valuation to this at all. And so anything that you can get for this business segment makes ultimately our return on Alibaba much higher, I would say. And here's a little bit more detail on the spinoff. So with I want to pause and just say that, some you guys are a little bit more or a little bit less experienced with investing. And sometimes I talk too fast and I talk really like insider knowledge-y type thing. And so I just wanted to point out that with spinoffs, you're not losing anything. You'll just go from one Alibaba share to shares of potentially 6 different companies. And the idea here is that the spinoff companies' share prices reflect their true value or closer to their true value. So it should be accretive overall for your holdings. And so that's the hope. It doesn't necessarily always happen. And so, with cloud, the only other thing that I want to add is that they intend to structure the spinoff in the most tax efficient way for the shareholders. So in other words, it's just going to be equity. You're just going to get equity. So new shares. I think that's the way that they're going to do it. And they target to do it over the next 12 months. So this time next year, this is my birthday weekend. So this time next year, I'll get a birthday present with Alibaba Cloud. Let's see how my wife can top that gift. So with the international business group, this is weird to me. Like, I don't really understand what external capital raising for Alibaba really means. Like, how is that different from an IPO? I'm not really sure. Oh, you know what it might be? It might be debt. But this doesn't make sense either. So, I want a little bit more information. You guys might know better than I do on this. So let me know what you guys think. What are your thoughts here? Is it just private investments? It could just be private investments and not necessarily a public offering, right? And so that might actually be it now that I think about it. But you guys let me know. With Sinyao, they're going to IPO it. Now, what's interesting is I think I might have just forgot this, but they own approximately 2/3 of the company, not the rest of it, not all of it. They're targeting to spin this off or IPO it over the next 12 to 18 months. So I might get 2 gifts over the next 12 months. So Cloud and Sinyao spun off. And then here's the third gift, but I might get it a little bit sooner, is they're going to IPO Fresh Hippo. I am 100% on board with this. I don't think anybody's giving them value for what Fresh Hippo actually is. If you go back and take a look at my 5 or 6 part series that I did when I initially started covering Alibaba, Fresh Hippo is something that I was really excited about. I showed you guys pictures of their grocery stores and where you can pick up food on your way to work, etc. It was really interesting. They're way ahead of us here in Canada, that's for sure. And so the IPO of Fresh Hippo is expected to happen over the next 6 to 12 months. So this is the overall plan for the restructuring. And if you guys have any questions on that, let me know. I'll try and answer as many as I can. I'm still learning this as you guys are as well. I don't have any additional information. Now, one thing that a lot of you guys will notice is that they didn't really buy a lot of shares in the quarter. They bought approximately $2 billion shares in the quarter, and despite the fact that they made almost $5 billion of free cash flow. And, that might seem like not that low of a share repurchase relative to the free cash flow that they've generated. But, you have to also compare that to the excess capital on the balance sheet. And I think it's something like $80 billion. I'll take a look at that with you guys in a second. But of course, I think due to the spin-off announcements and just, the uncertainty of the whole environment right now, I think they're being prudent with the cash. And I also think that some of the cash will be distributed to the business units to help them get going. And I don't exactly know how they're going to do this, but that's kind of my thoughts initially. I want to know what you guys think about how they're going to manage cash with these spin-offs. And so this is what I mean about the excess capital. So it looks like it's ballooned to approximately $80 billion and the company has no debt. And that includes the cash and equivalents, the short-term investments, which is the big piece of that. And then of course the restricted cash. And so I just put that all into the excess capital. And I do believe that, some of that should have probably been deployed into share repurchases, especially in this environment. But once again, I think that there's just stuff that we don't know. They're trying to be as prudent as they can. Those are my thoughts at least. And I do think that some of this will get distributed to the companies as they spin them off, which you will ultimately receive back in the proceeds for the spin-off. So I think actually you could potentially have accelerated share buybacks once these spinoffs are done. And I see a situation where the holding entity just is flush in cash as a result of all of this. And so, I do see more spinoffs on the horizon. However, do you get spinoffs in a higher share price environment, which is what a lot of investors are kind of upset about? Like if the share price is going down to under $80 per share and it's the whole entity that you're buying back shares for, why wouldn't you want to accelerate those buybacks in this environment, especially when there was a lot of supply of those shares on the market? And so, a little bit disappointing. I'm disappointed. I wish I saw, like 15 or 20, even 25 in the quarter would have been great to see. Now, just quickly on the highlights, I'm going to cover this in more detail on the full walkthrough of the Alibaba analysis. I usually do like a half an hour to hour, maybe closer to half an hour analysis of the quarter. But notice that China commerce went backwards in the quarter. Now, a lot of you guys would be surprised. Why did China commerce go backwards in the quarter? This is why I was still forecasting minus 5% for the year. I believed that China commerce could actually go backwards in this quarter, and just the prudency proved to be important in this situation. And I'll show you why I believe that this was going to happen. In fact, I told you guys why I thought it was going to happen in the last quarterly analysis. Now, the other thing is cloud went backwards. This is a surprise to me. Now, year over year, cloud is ahead, but there's some challenges here. Now, the other thing is, notice that income from operations is much higher than last year. And so, the focus on profitability maintains. And so I think that's very exciting as they're delivering on their promise to be more profitable. Ultimately, I mean, you had 70 billion RMB in the last year and then 100 in this year. So that's really good. So the question is, why did I believe that China commerce had the potential to go backwards? Recall, guys, from the Q3 transcript, half of this quarter was still impacted by COVID closures. Remember, from January to early February, this is what Daniel Zhang said in the Q3 transcript. From January to early February of this year, overall sales of online physical goods remained weak, and our China commerce continues to be highly impacted due to COVID cases, as well as people traveling home or to other places during the Spring Festival holidays. But as influence of COVID cases at Spring Festival travel subsided in February, especially recovery in categories such as apparel and sports and outdoors, as work and life return to normal. So in other words, one of the things that we were saying in the after the last earnings report came out is that the real post-COVID impacts will be felt in the subsequent quarter. So the first quarter of their fiscal 2023, I guess, or is it their fiscal 2024? I can't remember. And so actually, never mind. It's their fiscal 2024. Anyways, so it's not bad because it starts their whole new year off really strong, but ultimately, it gets a little bit distorted with all these IPOs and such. And I just wanted to provide you with a little bit more color on why they would lose orders as a result of COVID disruptions. And so, Daniel Zhang did speak about this. He said that, the problem with the logistics being backlogged or delayed is that the consumer will purchase the item, but then the consumer will return the item because there's been a logistics disruption or the logistics just didn't work out. And so overall, they're seeing recovery in logistics and declining return rates, which will inevitably flow into the results. But once again, you'll see that in the first quarter of their fiscal 2024. So I just wanted to provide a little bit of that context because that will be missed. There's a lot of people on YouTube that, just like surface level this stuff. So they don't really understand what's going on, but they do provide you with good stock analysis calculators. I will say that. Mind you, I also have a stock analysis calculator. It's called the super sophisticated stock analysis calculator, and it's for free in the description below. Nothing to subscribe to. Now, just diving a little bit more into the China commerce segment, you can see that they did decline mainly due to the decrease in offline store sales, which was negatively affected by the COVID-19 disruption. But, I'm sure in the transcript, they're going to talk about the logistical issues as well. Also, notice that grocery actually declined due to the decrease in consumer hoarding behavior post-COVID-19. Very interesting. Now, notice the EBITDA margin is higher. Now, I'll cover this in more detail in the full analysis, but once again, they're delivering on the fact that they wanted to increase profitability for the company as a whole. Now, international continues to do well. Lazada is outperforming, and AliExpress has a new offering. So AliExpress just launched their choice program. So basically, it sounds like it's like Amazon Prime. So, consumers in selected countries enjoy free shipping, free returns, quality delivery guarantees when placing orders on choice, and their daily orders have ramped up at the double-digit rate for AliExpress. And so that's very good. In Southeast Asia, Lazada continues to increase their order growth at a double-digit rate. And they also found ways to improve their monetization by offering more value-added services that resulted in improving revenue growth. So very good. International doing very, very well, much higher than what I expected them to do. Cloud did go back 3% year over year, and essentially it reflected delays in the delivery of hybrid cloud projects given the COVID-19 resurgence in January. So they're going to blame it on COVID, which is fine. But remember that they did say that the cloudification is picking up. So I think similar to the China commerce segment, I think you might have an outperformance in cloud in the first quarter of the new fiscal year. So, their cloud segment revenue is becoming more diversified. So I'm glad that they're reporting on and focusing on the right thing. I want you to cloudify the non-internet industries because that's stickier, it's better revenue overall. And so revenue contribution from non-internet industries to the cloud segment was now 55%. So that's really good. And this will just continue. Ultimately, the majority of the customers are non-internet based customers that want to enter the cloudification, do more with less, more efficiently, etc. Now, like I said previously, they are delivering on their pledge to focus on profitability. I'll dive deeper into this in the full analysis, but you can see that their adjusted EBITDA margin or adjusted EBIT margin, or even just focusing on the adjusted EBITDA margin, it is up to 20% and 70% on EBITDA. Much higher, or just I guess slightly higher than last year, but this is what you want to see. You want to see this move in this direction because profitability has really been the focus, not just for Alibaba, but tech names in general in 2023. So going into 2024, you're noticing that they're able to deliver on the profitability initiatives and you're seeing it in the results. This is very good to see. Finally, something that others might miss is notice how there's some challenges with Ant Group potentially. Notice that the revenue for the quarter went way down, so year over year. And so I'm not really sure what's happening here. I'm going to try and dig into this in the full analysis and see exactly what's going on, but I just wanted to put it on your radar, guys. And so that's it for the preview. Now I'm going to update my model for Alibaba and put out a full, complete comprehensive view. Now, if you want access to the Alibaba model, which I believe is imperative, especially now as these things start to spin off, I think that model will get very complicated, but also very useful. You can get access to the whole model at just the lower tier of the Patreon. And if you want to join us for our monthly calls and get access to the regional banks comps tracker and all that stuff, you can join us at that higher tier. And so with that, I'm going to actually link to the Q3 video that I put out, which I think is absolutely important for you guys to see if you want to sort of understand how the company has moved from Q3 into these Q4 results. And you can get access to that video right here.